Namaste. Welcome to the solarane.com weekly brief, your Saturday recap of the business week that was. I'm your host Karan Mehta, and this is the week of April 13 to April 18, 2026. 5 short trading days, 1 market holiday, a rupee that went down and came back up, and quite a lot for Indian MSMEs to unpack. Let's rewind. Before the themes, the scoreboard. The Sensex ended Friday at 78,494, the Nifty at 24,362, roughly flat on the week after a whipsaw middle. The rupee slid to a 3-week low of 93.4, then recovered to 92.50. Brent crude stayed parked near $100. March GST collection crossed 2 lakh crore for the first time ever, and the IMF, in its April World Economic Outlook, bumped India from the 4th to the 6th largest economy. More on that in a bit. The story that dominated this week was West Asia. Monday opened ugly. The Sensex shed 702 points on fresh Iran jitters. Tuesday was a trading holiday for Ambedkar Jayanti. By Wednesday, reports of US-Iran peace talks sent the Nifty rallying 1.6%. Thursday reversed that. Profit booking plus news that the US was extending Hormuz pressure and letting the Russian oil purchase waiver lapse pushed the rupee to a 3-week low. Friday, de-escalation headlines sent the Sensex roaring back 504 points. Why did this matter to businesses? Because the underlying squeeze didn't go away. Analysts estimated India's oil import bill could rise by $70 billion a year if crude stays elevated. Fuel prices held steady, but that's a policy choice, not a market reality. State Bank of India said the rupee won't structurally recover until the second half of FY27. For MSME exporters who invoiced West Asia customers in dollars this quarter, you caught the round trip on both sides. If you haven't already, hedge your dollar receivables before Monday opens. The second thread running through the week was compliance. March GST collection crossed 2 lakh crore for the first time, up 8.8% year-on-year. FY26 closed at 22.27 lakh crore, a record. That's the headline. Under the hood, April 1st was when the screws tightened. The GST Zero Mismatch policy went live, meaning any gap between your GSTR2B and your supplier's GSTR1 now auto-holds your input tax credit. Separately, the e-invoicing threshold dropped to 5 crore rupees of turnover. If you're a business between 5 and 20 crore of revenue, you are now in the e-invoicing net for the first time. And on the digital payments side, RBI's new 2FA rules for UPI, cards, and e-wallets also went live this month. What to do? Reconcile your purchase register against GSTR2B this weekend. Chasing down a non-compliant supplier in May is much harder than switching vendors now. The third theme is the strangest. On one hand, the HSBC India Manufacturing PMI slid to a 4-year low of 53.9 in March. Cost pressures, Middle East uncertainty, tepid domestic demand. Reports this week flagged that Reliance's $1.1 billion battery plant has equipment stuck at Chinese ports because Beijing tightened export controls on lithium cell technology. On the other hand, India crossed 2 lakh passenger EV units in FY26, with Mahindra's EV volumes up over 400%. John Cockerill India landed a 300 crore CGL order from JSW Steel for its Khopoli line. NHAI beat its FY26 highway construction target by 15%. So, which is it? Both. Domestic capex is firing. External dependency is biting. The lesson for MSMEs sitting on PLI benefits or import-dependent inputs? Front-load your capital equipment orders before China squeezes harder. Localize what you can. A few more headlines from the week you should know about. 1. The Cabinet notified Startup India Fund of Funds 2.0, a 10,000 crore corpus to mobilize venture capital for deep tech. 2. The India-Oman Free Trade Agreement goes live. May. 1. Textiles, food processing, gems, and auto components are the big winners. 3. The IMD's monsoon forecast came in at 92% of long-period average, a below normal year. CPI inflation rose to 3.4% in March, Food inflation to 3.87. Rural-facing businesses plan for softer Q1 demand. 4. Wipro confirmed a 15,000 crore buyback at 250 rupees. Below the street's 18,000 expectation, TCS and Infosys continued staff layoffs even as revenue grew. AI is replacing hiring in Indian IT. 5. The IMF dropped India from 4th to 6th in global GDP rankings. Podos? Paidi Jiribo, that's mostly rupee depreciation, not growth. India remains the fastest growing major economy. And late today, ICICI Bank reported Q4 profit of 13,700 crore, up 8.5%, with a 12 rupee dividend. Parliament's budget session also concluded today after 31 sittings and 9 bills, including the Finance Bill 2026 and the Jan Vishwas Amendment. Stepping back, if you ran a business this week, here's what you should carry into Monday. 1. Hedge your forex exposure. The rupee's whipsaw is the new normal till late 2026. Forward contracts on dollar receivables and payables are cheap insurance right now. 2. Get your April GST compliance watertight this weekend. The e-invoicing net just got wider. Input tax credit holds are automatic now. 3. If you're sitting on unutilized PLI or CapEx budgets, move fast on imported equipment. China's export lever is the new geopolitical tool. 4. For rural-facing FMCG, agri-input, and two-wheeler MSMEs, a below-normal monsoon plus sticky food inflation means Q1 FY27 demand will be soft. Pull forward your working capital planning. That's your solahane.com weekly brief for the week of April 13 to 18. Daily briefs resume Monday morning. ICICI just reported HDFC Bank is up next week, and the MSME Startup Innovation Summit lands in Delhi on April 23. If you're thinking about buying or selling a business, head over to solahane.com, that's 16ane.com, where we make business deals Solah Ane Pakka. See you Monday.